Hello guys, this is Ahmed Al back here with you and welcome to another training video about the technical analysis. So this is our third video about the technical analysis series and we're gonna go to look into it now. So in this video guys, we're gonna go to speak about the technical analysis course. We are continuing of doing that. And today's topic is about how to use the different time frame in the chart and how to compare them with each other. This is very useful video for you guys. And by the end of this video, you will be able to match the stages between the chart and you will be able to trade properly and make your entry in more accurate manner. So stay with us, please. We will start in a moment. So first of all, as usual, I would like to tell you guys that the blue candles on the charts will represent the buy candles and the red candle in the chart will represent the sell candles. Initially guys, we will start with the chart and this is the daily time frame chart. So what we are going to look here, we're going to go to look into the daily chart and later on we're going to go to drill down the 4-hour time frame chart and we will explain what does the three stages market mean and how to match the stages and how does these stages looks like. So initially guys, if you look to this area, you will find that the price has came from this level down here and continued to climb up. It's breaking out here. Then it has made a small candle of retracement, which is the sell candle. Then after that, it has continued to go up with the blue candle buy. Then after that, it has retraced with the red candle again. Then after that, it has continued to go up again and it has pulled back here. However, when you look into this area, you will see a small candle here and you will see another small candle here and you will see another small candles here, and that is the area where we need to place our entry, and I will explain this now. So if I split this from here and I put for you the 4-hour time frame chart, then this is the same chart which I am having on the daily. So basically whatever you can see here, a small candle, this is 1-day candlestick. And in this candlestick, if I look to this chart, I will see that each 1-day candlestick consists of 6 candlesticks of 4-hour time frame chart. So if I look to this area, because the 1-day candlestick is equivalent to 6 candlestick on the 4-hour time frame, then this means this is the area. So if you look here guys, you're gonna go to see this and this is continuation pattern. However, when I drill down to the lower time frame, I will see here that there is a continuation pattern which is clearly on the lower time frame. So why I need to use the lower time frame and I don't use the higher time frame for an entry? So basically the lower time frame will give me the best entry because it's having more candles. So if I look to the 1-day time frame, I will not be able to enter here simply because the candlestick closure is big candle. So I need to wait big time to find out the closure for the daily candle, and based on that I need to place my trade. However, if I want to select or enter with the best entry, I must drill down to the lower time frame and I must match the stages. So if you see this blue candle, those are the candles here. If you see this red candle, those are the continuation pattern here. So if I go to the next one also, I will find the same. This is the big candle here, and this is the one, and this is the continuation pattern here. And if I go to the next one here, you will find this is this area. So this where the price has started to resist, and on the lower time frame I can see that there is a rejection candles here and I can place my order from this area. So by looking to the bigger time frame, I will be identifying how does the trend look like on the bigger time frame. So for me to select the best entry, I need to drill down to the smaller time frame and identify the continuation button and the reversal button and place my order based on them. So why we use the lower time frame? Because lower time frame will give me more candles and will give me more earlier indication for earliest entry. So based on that, if I look into this one, I can see swing high, then pull back, then swing high, then pull back, then swing high, then large pullback. So this one, we call it the market stages, 3 stages. So one swing, one stage, pull back, one pull back, second stage, swing, pull back, third stage, swing, and pull back. So how we can identify those on the lower time frame? By seeing the continuation button. If I draw the continuation button on this lower time frame. However, when I calculate this continuation button, I can see the angle of the retracement is supposed not to exceed the 50% of the swing. So all of these are 50%, less than 50% of the swing. However, when it comes to the upper one here, it did not retrace and it has given me rejection candles. So based on that, I can place my orders. So to summarize, you need always to start from the bigger time frame and drill down to the lower time frame to evaluate your entry. So since I cannot enter here in this candle because it's big candle and it's not closing, I can see the lower time frame and I can have more candle in this area and I can know now how to trade these and whether there is any rejection candles or any patterns here, then based on that I can trade. Similarly here, if it's continuation button, I know that it's continuation and I will place buy from here up and here I will reverse and put myself. So you need always to start from the bigger time frame and drill down to the lower time frame and match the stages. What we mean to say by match the stages, you can see here that there is a pullback and that pullback on the daily time frame, I need to match it with the 4-hour time frame and identify whether that pullback is continuation button or reversal. We said that we need to match the stages and make sure the continuation for the breakout and the pullback for the stage 1, 2, and 3 is intact. So the third thing you need to know, always think about how much you are going to lose and make sure your stop loss is minimized. So if I drill down to the lower time frame, I know from the small candles where I can place my stop loss and where I can place my entry in accurate manner. However, if I compare these here and I want to place buy order, if my stop loss under this long tail here, I might end up having my stop loss in this area. However, if I drill down to the lower time frame, I can place my stop loss here in this area, then in this way it will be shorter stop loss or minimized stop loss. So this is another benefit of drilling down to the lower time frame. Fourth, you need to know the angle of the retracement or the pullback. If it's lower than 50% or cross the 50%, that means it's bad signal. You don't trade buy if it's continuation button. However, if the angle of the retracement is lower than the 50% of the previous swing, that means it's a good indication to place your buy. The fifth thing is the depth of the retracement, and that depth of the retracement also is tallying with the angle of the retracement, which is related to the 50% of retracement beyond this limit. So this is what we have meant by the bigger time frame and the lower time frame, and this is how you need to drill down from the bigger time frame to lower time frame to select your best entry and to match the stages and to see the depth of retracement, whether it's below 50% or above 50%, and to know the market stages. The market always will move in 3 stages, so it will give you swing, then pull back, then swing, then pull back, then swing. So you need to identify where is your price and which stages we are now. And you can see the stages. If it's not clear on the higher time frame, you can clearly see it on the lower time frame, and that's why we use the lower time frame. So this is swing pull back, stage number 2 swing pull back, stage number 3 swing, and this is the area where we need to sell, and from stage 1 where we need to buy. So the market stages, guys, happening on all time frame, and this is how you need to use it. So finally, guys, if you like this video, please hit the like button, subscribe to our channel, and share this video with your friend so we can deliver to maximum community and we can produce more video which will be benefiting you in the future. Thank you very much for watching this video and see you in next technical analysis training video.